Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on 4th of May 2018, and we're going to be starting off with the S&P 500 E-mini futures market. So this market had an interesting development last week where price basically pulled back to the 2600 level yet again. The 2600 round number support has been proving to be a very important zone for this market in the recent past. Of course, we've had multiple instances in the past where price just pulled back to this level and basically held as support. And in the past week, we pretty much saw evidence of the same phenomena. We have price basically pull to the 2600 and rebound very strongly off of it. We had a bullish pin bar print over here, and then on Friday we had more bullish activity as price basically pulled further away from the 2600 level yet again. On the more broader front, we're just continuing to see more and more evidence of price basically getting stuck within a wedge pattern formation. Of course, we're also seeing higher lows and definitely lower highs here as well, all indicative of the fact that price is definitely just tightening up within the zone here, and we could be moving towards an eventual breakout either towards the upside or downside, depending on how the case basically develops here. For now, we're just continuing to expect price to basically just react to these mid-range sort of minor support and resistance levels created within the wedge pattern formation over here and the broader consolidation that this market has been in. So, for example, we're looking at this level right where price pretty much closed at on Friday. We've had instances of former support and resistance at this area, and it may just likely continue to allow price to oscillate around it and basically consolidate further within this wedge pattern formation before eventually either breaking towards the upside or towards the downside for possibly a more sustained move in either direction. Until then, we'll really just expect the market to continue to consolidate and just tighten up within this pattern. Okay, so the next market we're going to be looking at here is the light crude oil futures market, another interesting market to follow last week. For this market, in the video that we did last week, we discussed about the 6600 level and how in the past that this level held as very, very solid resistance for the market. We have two very obvious instances here where price bounced off the 6600 and the sellers were able to take control for a while. We had talked about this rising support trend line and this constricting pattern that was created here from the rising trend line and of course the 6600 level. We eventually saw the breakout of the market above the 6600 level. It was nice and strong, and since then the market sort of had lost momentum and we were pulling back again and again towards the 6600 area in general, not precisely but definitely in general. We sort of came close towards that area. And we had talked about how the 6600 level, if it flipped into support, support as strong as we had witnessed resistance of the level, the market could definitely just continue to propel up north and basically resume this more longer term uptrend that we've seen this market develop pretty much over the last year. And we saw the foundations of that being laid last week. The last two trading sessions, Thursday and Friday, the bulls were really active, and importantly, on Friday we were able to close not only at a new high for the market, we were also able to basically close well past all of this consolidation that we had seen post for the initial part of last week and pretty much the bulk of the week prior to last one. And that really just indicates to us that the bulls here look well primed to just continue to lead this market and allow price to propel further north. Just looking at the broader picture here and possible targets for where price could be headed if this bullish momentum just continues, we're definitely eyeing the 7600 level here as a very important one for this market. As we zoom out, we can actually see that the 7600 level here pretty much lines up with a very, very significant former zone here where we had multiple instances of very, very strong bounces right around the 75 to the 7700-ish areas, and that's precisely where we believe that this market could eventually be headed if the bullish momentum continues, and which we expect to continue. So really we're just looking at the 75 to 77-ish areas as where this market could be headed if the bullish momentum just continues. And so far, it looks like the bulls are primed to just continue leading and basically taking control of the market. Okay, so the next market we're going to be looking at here is the gold commodity futures market. This was another market that posted some very important and major price action in the past week. For this market, we've been talking about the 1300 extremely major horizontal support and resistance level and round number. We've had obviously multiple occasions in the past where price had either found formidable support or resistance at this level. In the recent past, for all this consolidation that the market has seen, the 1300 level has also pretty much been acting as the ultimate floor for the market. The ceiling here obviously was marked off by the 1350 resistance level, where price obviously tried to, for multiple times, test and possibly break it towards the upside, failing each time and allowing the sellers to dominate the market and allow price to basically push back into the consolidation phase. The past 2 weeks, however, have been different in the sense that the sellers have actually been able to control the market to the point where in the past week we eventually saw the market come very close to testing the 1300 round number, which is an important development. Our expectation from this market has been that we're going to see a more sustained move in either direction as price either breaks the 1350 level or breaks past the 1300 round number support. And each time that price tests either of these two levels is an interesting time for us, and definitely a time that we're avidly following the market. And over here in the past week, we actually again saw a bounce of the 1300 level. Again, not a surprise at all looking at the strength of this level just in general, but just from the perspective of anticipating a possible break towards the downside. What we're noticing here is that the market, the way it closed on Friday, is actually tucked very close to some rather reactive but short to mid-term support and resistance levels that were created by the price action or the oscillating price action within the consolidation phase. And that in turn could actually create some hindrances for price as it tries to bounce off the 1300 level, or basically trying to cap the attempt from bulls to take price further up towards the middle of this consolidation phase, or possibly even up towards the 1350 resistance level or ceiling for the consolidation phase again. And so really we believe that if these levels come into play and allow the buyers to or cap the attempt of buyers to trying to take the price further up north, we could see another quick retest of the 1300 level. And if we do see multiple tests of this level, we may eventually get to the point where the market can then consolidate and gear up to break towards the downside, and we could see something like this develop. Although that again sort of remains to be seen. For now, we're definitely seeing some buying come into the market at the 1300 level, which is to be expected. But like we said, if these short-term levels just continue to come into play, we could eventually get to the point where we would then be anticipating for the market to actually break towards the downside and underneath the 1300 level for a sustained move towards the downside, possibly just building momentum towards this this initial selling that we've seen this market post over the past couple of weeks. Okay, so the next market we're going to be looking at here is the euro currency futures market, which over the past week just continued to build on the momentum that the sellers were able to generate over the week prior to last one. Of course, all of that has basically stemmed out of the breakout that we witnessed for this wedge pattern formation over here. We had an initial breakout underneath the rising support trend line. We never really pulled back for an initial or an extended pullback towards this support trend line, and the sellers were really just able to dominate the market and allow price to just continue to drop towards some of these more important levels that we've been talking about for this market, including the 1.21 level. We actually hit this level in the past week, but we didn't really see the kind of bounce or the kind of trouble that we were expecting sellers to basically experience at this 1.21 resistance level, former resistance level, which we thought would potentially cause or flip into a formidable support zone for this market and allow price to just bounce right back up. We really didn't see any of that at all. We did see a minor pullback at this level before price just continued to push down. And on Friday, we actually saw the market not only test the 1.2 round number, but also sort of close in the vicinity, which pretty much just labeled the week as clearly belonging to the sellers. So that's basically 2 consecutive weeks of very strong selling that we're seeing into this market. And although all of that just stays as it is, we're still not very confident of a sustained move towards the downside. And the reason for that is that not only are we looking at the 1.21 round number here, or the 1.2 major big round number, we're also looking at a lot of other minor and major support and resistance levels in the vicinity that could definitely cause a lot of trouble for sellers here. So for starters, we have this level right around here, as you can see. In fact, if we just pan it out further towards the left, you can see we've had instances of support and resistance at this level, and it's definitely one to look out for. And price hasn't really touched it yet, and if we do actually see some more selling come in the market, this level will straight away come into play. There are also levels underneath this, the one that we drew right now. So here we go. Here's another one that is definitely one to watch out for. So in general, what we're looking at here is that price is trying to penetrate into a former recent phase of consolidation that this market has been in, and of course all of the levels that are created within that consolidation phase. So if you just draw a rectangular pattern here, you can see that this was a consolidation phase that the market is now trying to penetrate through. And that is usually, not always, but usually a hard feat for the market to accomplish. And we definitely will see a lot of hindrances and obstacles and friction as price tries to meander past all of these levels that may seemingly look as short term, but can definitely have a very profound impact on live market action. So although we're seeing a lot of strength from the sellers here so far, we're not very confident of this momentum to continue for too much longer. On the flip side, we do at least expect the market to hold up here at the 1.2 round number, and where it is pretty much at right now. We could see some consolidation, some sideways movement here, which pretty much is the theme for this market for a while now. So if we just zoom out of this market a little bit to look at the longer term picture, it has kind of been the theme for this market for the past several months. We're seeing sharp moves followed by sideways movements, another sharp move, and again more consolidation over here. Now we're again seeing a sharp move towards the downside, and so just because price is obviously straddled at some very important price levels here, it's really not unreasonable to expect another period of perhaps at least a sideways consolidation mode, if not a definite bounce off of this level. So that will be our expectation. It's nice to see the market post a nice sustained move in one direction, but just looking at the market and how it's poised right now, it just seems that this momentum may not continue for too much longer. Okay, so finally we look at the 10-year Treasury note futures market. Now this is a market that pretty much performed exactly as per our expectations the last week. For this market, we've been talking about the 120 extremely major round number that initially was acting as very, very crucial support for this market. Of course, the sellers were dominant up until the point where the market hit the 120 round number, and since then there were like multiple attempts from the market to try and break past this level. Each time the market failed, we eventually saw price sort of rebounding for a decent move back up before eventually attempting to try and break the 120 round number support again. And this time the market was successful, but we noticed that even though the market broke past the 120 round number, the move was really just one motion. We didn't see the market sort of stop underneath the level, pull back towards the 120 round number, confirm its role as resistance before continuing down. And so even though the week prior to the last one we did see a lot of major selling come into the market, we did suggest that the market may just hold for a little bit and allow for the buyers to regain control momentarily, to allow price to basically pull back to the 120 round number, where we could once again see some fresh bout of selling come into the market, which would basically confirm the role of 120 round number as turning into resistance. So we would have like a textbook play of formidable former support turning into formidable resistance. we're seeing the foundations of that market phenomena here for sure. On Friday, we did see the market pull back up to this level and rebound very sharply, and basically we saw a bearish pin bar print off the level on Friday, which so far lays the foundations for sellers to just continue to dominate this week onward. However, we're still going to be looking for at least a couple of candlesticks continuing to move down and close strongly towards the downside before confirming this level as resistance, because as it stands right now, we still just have one candlestick sort of bouncing off the 120 round number, which isn't a strong enough indications for us to claim that the 120 round number is definitely acting as confirmed resistance. On Monday, if we don't see any momentum from the sellers, we could actually see the market go right back up, and you never know. Just looking at the more sideways theme that this market has been in the recent past, we may actually see the market pop right back up and either consolidate the 120 round number again, or who knows, maybe even just continue further up, basically to label as all of this move underneath the 120 round number as a fake breakout. So all these scenarios can still play out, but so far, just looking at the way that the market is poised right now, it definitely should allow for a platform for sellers to just continue to dominate